Motorola, the largest U.S. mobile phone maker, put out an earnings forecast that signaled demand for models like the Droid is helping to reverse a 3-year sales slump in that unit. Greg Brown is co-chief executive at Motorola. He joins us now. Greg, welcome to the show. Thanks for joining us.
Thanks, Matt.
Let's talk first about what's going on in your business. The forecast better than expected. Wall Street happy about that. A lot of it, though, we can get to the Droid in just a second. A lot of it, though, has to do with massive cost-cutting efforts. How are those going, and what do you see as far as the future of, do you continue to cut costs? Do you have enough cash? Are you going to start actually hiring people back again? What's that look like?
So I think Q1 was a very good quarter for Motorola. Headline, we grew cash by $450 million. Matt, in the quarter last year, we burned through a sizable piece of cash. I don't think it's as much about cost cutting. I think it's back about growth. Our enterprise mobility business, which is really public safety, mobile computing, grew 6% in Q1. For the full year last year, it contracted 13%. Earnings in enterprise mobility grew 25%. Our wireless network infrastructure business, best-in-class gross margins, best-in-class operating margin. Our connected home video business grew in earnings, grew in operating margin. So I think the story about Motorola now is more about growth, earnings generation, and cash generation. And Sanjay is doing a very good job of narrowing the operating loss in mobile devices, shipping more smartphones. So in aggregate, it's a more powerful story.
Interesting. The Droid obviously has been widely seen as one of the only real competitors to the iPhone and smartphones. Not in the business segment, obviously. You got the BlackBerry there, but for folks that like to use these devices and actually spend a lot of money on the data in these devices, how do you plan to cash in on this, and how do you plan to boost market share? Because your smartphone business is really just fledgling compared to some of your other businesses.
Yeah, but Sanjay comes in about a year ago. We effectively have no smartphone presence. In Q1, Motorola ships 2.3 million smartphones, third in North America from virtually nowhere. Guided for Q2, expansion of more smartphone shipments. In addition to that, we now have 8 Android-powered devices, and for the full year, we've announced a portfolio that will be 20+. So it's a portfolio that's completely refreshed, revitalized, Android-centric, on the move, and Droid's been a fantastic anchor tenant for building that momentum.
I wonder what are you going to do to continue growing that business, though? Because Google obviously is now releasing its own phone, and there's the interesting issue of Palm being in play, right, with Hewlett-Packard's offer.
Well, I think the growth story on the mobile devices side is expand the portfolio. Primarily, distribution and sell-through is North American-centric. Tremendous opportunities in China. Expected growth in Europe again. Moto Blur has been a significant Motorola-specific application around differentiated aggregation of social networking experiences. So I think it's broader product portfolio, significant emphasis on the brand, distribution and geographic reach, and some exciting things to come.
What about Palm? I mean, do you plan on making a counteroffer, or let's go right ahead and ask?
Well, first of all, that would be Sanjay's call, not mine, but no, I don't expect
But he would have talked to you about it, I'm assuming.
I don't expect
you guys have lunch. He says, I'm looking at Palm. No?
No, I don't think so.
All right. Hey, Greg, thank you so much for spending some time with us today. Greg Brown, co-CEO at Motorola.